Welcome back to another weekly market outlook. This is for the 26th to the 30th of June 2023. This is the last week of June. We are going to be in July next week. All right, so let's get started with a quick recap of what's been going on last week. A very interesting week in terms of economic development. Obviously, focus is going to be on the UK side of things. We've got the inflation number remaining sticky at 8.7%. The consensus was for a drop to 8.4%. The market didn't get that. We get 8.7%, and this causes the Bank of England to react kind of excessively, if I would say. They hiked up the interest rate from 4.5% to 5%. That's a 50 basis points hike. Expectation was for a 25 basis points hike. So obviously, this is not something that's positive, right? If we take a look at the current situation in the UK, in terms of their economic stability, they're borderlining a recession. The push higher to 5%, that's going to put a lot of pressure on the economic side of things. Obviously, if we take a look at the consideration here, the more the Bank of England hikes, which is something that they need to do to control the inflation, there is a potential for this one here to develop into a cost-push inflation or a potential wage spiral in the UK. And that basically causes the concern in the market. And that really sends the sterling down last week on the back of the interest rate hike. So it has the opposite effect, right? This is a case where if something is a little bit too much, it is too much, and the market just kind of reacted negatively to that. And then we have the J. Powell testimony. Usually it's the Senate first and then the House, right? We got the House first, which doesn't really focus a lot more on what they're doing, really, in terms of the questioning. It's a little bit weird, more on the racial status, on what the FOMC is and stuff like that. So I didn't give the whole picture during Wednesday's testimony. Right, it might have sounded that the FOMC wasn't as hawkish as what the market was expecting it to be. So that was the initial reaction on Wednesday, and then the Senate Banking Committee on Thursday asked a lot more direct questions, right, in terms of what the FOMC wants to do and whatnot. So what the FOMC is basically trying to say is that they hiked up 75 basis points, and they gradually drop it out to 50 and then 25, and then we had that skip last June. So what's a comparison given by J. Powell is this? It's like driving on a highway and then exiting the highway with a slower speed limits, and the closer you get to the destination, the slower you're gonna go. That's basically what the FOMC is doing right now. So they're slowing down the pace, but they will still hike interest rate. Okay, so that kind of gives a little bit of an insight in terms of what the FOMC wants to do in 2023. So they still want to hike 2 more times, potentially at 25 basis points each in 2023. Not expecting a rate cut in 2023, and that turns to be as hawkish as it could be, right? So it's kind of a little bit of a turnaround in market, and market wasn't convinced on Wednesday when it sounded a little bit of issue. We can see that the market was a little bit more stable, right? Market was really more on the sideline. They really want that confirmation coming out from the Senate testimony. So we got that. And there were talks whether or not it's a bluff from the FOMC if they can actually hike interest rate or not. But coming up from the testimony, it does seem that they have that capability to hike, even though with the unemployment rate increasing lately, it is still at a very low level, lowest in 40 years. So they still have that room to hike interest rates. So it causes a little bit more of a dollar strengthening itself. Okay, but that's pretty much that. And then we have the weekly unemployment claims, which is pretty much the same number as the previous week. So it is more on the lower side. Doesn't really cause us that huge of an impact. The flash manufacturing PMI and the services PMI on Friday, though, all of them are pretty much negative, right? In terms of the manufacturing numbers, if we take a look at the Euro numbers, the UK numbers, and even the US numbers, all of them are really, really low. So across the board, globally, the manufacturing PMIs have come down. So that really didn't change anything. It just brings back the status quo that the currency market is really driven right now more on what the central bank does, and still what does the inflation, what the inflation number is for the global markets. Okay, so leading up into this week, we've got two inflation numbers, one from Canada, that would be on Tuesday, and then we have another one from Australia, which is on Wednesday, right? And then there's going to be an ECB panel with Bank of England Governor Bailey, Bank of Japan Governor Ueda, and Fed Chairman Powell is expected to participate in. So we are going to see Bank of England, Bank of Japan, and FOMC discussing what their stance is for their monetary policy. Obviously, if we take a look at the Bank of England, they just hiked 50 basis points. Bank of Japan still ultra dovish, not even tweaking the YCC. And then we've got Chair Powell, the FOMC, which is kind of ambiguous in between. So it's going to be a very interesting, and I think this is it's going to be a very interesting day, and I think it's going to be a very high impact news coming out, especially if we got Bank of England, Bank of Japan, and FOMC at the same time in the same panel discussing what the global inflation is. I think this is going to be a very interesting thing to watch out for, and definitely going to create a lot of volatility in the market. So just keep an eye out for that event on Wednesday. And then on Thursday, we've got the Germany preliminary CPI numbers, not really the main focus. We've got the US final GDP numbers for the quarter, and then the weekly unemployment claims, obviously. But Friday, I believe there's going to be a flash CPI number coming out from the Eurozone, although it's highlighted as a medium impact, but it is listed. And I think that's going to drive the market on Friday. And on top of that, we've got the personal consumption expenditure numbers coming out from the US. So it's going to be a very volatile Friday as well. Okay, so that's coming out from the fundamental side of things. Now let's take a look at the technical front. We've got the dollar index, strong base at 102. We've got immediate resistance at 103. So right now the dollar index is actually stuck between 102 and 103. In terms of the probability, I think what we're looking at is that there's a higher probability for the dollar index to actually break above 103 at this point in time. Just taking a look at the momentum here, it starts to come off the oversold condition. So then there's an indication that the US dollar could actually strengthen itself. However, we're still keeping an eye on that range 102, 103. Therefore, if the dollar index gets pressured below 102, then we're likely going to see that open up. We might see that drop towards 101. But until that happens, I think right now the probability skews to more on dollar strength. We might actually see the 103 get broken much more easily. And if we take a look at the current condition, price is actually still within the Ichimoku cloud, so it is still going to be a little bit of a range bound market condition developing for the dollar index itself. Next up is the Aussie USD. Aussie USD, we already put out a note and several outlooks on the Aussie USD. If we take a look at the Aussie USD here, we got that rejection at 69 cents. We saw price drop below 68. The moment price dropped below 68 cents, what we were saying was that price could actually drop down even lower. In fact, last week it closed below 67 cents. So this opens up further room to go for the Aussie USD. And we take a look at the momentum, it's already pointing to the downside. Price has transitioned back below the Ichimoku cloud on Friday. And right now, this opens out another opportunity for price to continue to push towards 0660. So it's 66 cents and potentially towards 65 cents. Now, in terms of the immediate resistance, we're going to be focusing more on the weekly pivot. That's going to be at 67.40 to 67.50. So that's going to be roughly where the resistance is likely going to come in. Sellers are probably going to come back in at around 67.50. Okay, so overall, view remains the same on the Aussie USD. I remain bearish on the Aussie USD just because the RBA minutes has pointed out that the RBA was having a hard time making that decision in terms of hiking interest rate, just because moments before they hike that interest rate, average salary in Australia was basically increased, right? So if they continue to hike interest rate, and then the salary goes up just to match up with the inflation, it might actually cause a little bit of a wage spiral developing in Australia, which is something no central bank wants, okay? And which is probably the case with the UK at this point in time. Okay, so the RBA, in terms of where it is fundamentally and technically, I think we are potentially going to be looking at a weaker Aussie developing going forward. All right, next up is the Euro USD. Euro USD is actually back within the Ichimoku club, but one thing to point out is that rejection at 1.1. We saw a lot of sellers coming at 1.1. We saw a lot of profit taking at 1.1 as well. Now, 1.1 is obviously a key psychological price level, so we saw that happen. Right now, where it's finding support, that is actually at the range between 1.0850 to 1.09. And this is going to be the range that you need to watch out for. For as long as 1.0850 and 1.09 stays intact as a support, the Euro USD is likely going to get supported. And the only thing that could cause the Euro USD to slide down would be a close below 1.0850. And that would trigger a potential pullback towards 1.0750 and then 1.07. But it's not going to change the dynamics of things. And I'll show you the Pound USD after this. But the Euro USD here, it's more for a range-bound choppy market where the market is likely going to consolidate just right around 1.0850, 1.09. So we're likely going to see the market here for the Euro USD a little bit choppy in a smaller range. And we've got resistance at 1.1. We've got support at 1.0850. That's going to be how it's likely going to play out for the Euro USD. If there are demands for the Euro USD at 1.0850, 1.09 range, it will likely take it to test 1.1 one more time. If it breaks above 1.1, then that's where we might track even higher. We might see 1.11 and then 1.12. But until that happens, we would consider the 1.1 level to be a very strong resistance and 1.0850, 1.09 as a very strong range, demand range for the Euro USD. So just keep an eye out for the Euro USD. I think this one here is the info, a little bit of a choppy trading condition going ahead. All right, Pound USD, different scenario. Pound USD is still in an uptrend. The uptrend is very much intact and it's still pushing up higher at this point in time. Now, if we take a look at the current formation here, it does seem like it might actually form a potential bullish flag. Now, it really depends. We're looking at support 1 on the weekly pivot, which is at 1.2650. If the Pound USD is able to maintain that position above 1.2650, then yeah, we might actually see that bullish flag pattern forms and it might get confirmed and we might actually see the Pound USD track higher towards 1.29. Okay. However, if we lose 1.2650, then we anticipate that correction lower, potentially towards 1.25. And that pullback towards 1.25 is roughly going to be about 61.8% from the May-June rise in Pound USD. So it's still a normal retracement level. And in nowhere, we can call this a potential reversal in the Pound USD, because for a reversal to take place, it will need to close below 1.23, and price is very far away from 1.23 at this point in time. So we got a couple of scenarios. I think the scenario that makes sense is that for price to slowly track lower towards 1.2650, find buyers, and then bounce up to test 1.28 and 1.29. Okay. The other scenario is that we don't see that pullback towards 1.2650 and price just breaks through above that bullish flag pattern that we see. So any close above 1.2775 would actually any close above 1.28 would actually confirm that bullish flag, and we could actually see the Pound USD track towards 1.29. But again, very different condition with the Euro USD. The Pound USD is still very far away from the Ichimoku cloud. However, one thing to note here, if we take a look at the Ichimoku cloud for the next 3 weeks, this week included, right? The Ichimoku cloud is going to be rather thin, so that's probably where price could actually transition into a downtrend if it does maintain the current position or maybe break even lower below 1.25, right? So if price breaks below 1.25, in the next 3 weeks, then we could actually see price tracking lower towards 1.23 and potentially even break that 1.23 level. But we're still far from that. This is just more of a precaution for the next 3 weeks, right? But as it is for this week on the pound USD, keep an eye out on 1.2650 and then 1.28 as your resistance. All right, next is the dollar Japanese yen, and obviously the dollar Japanese yen, I'm not sure if it's going to get brought up, but I think the Bank of Japan might bring this up on the Wednesday panel. That the Bank of Japan and Ministry of Finance is keeping a close eye out on the Japanese yen weakness. They might intervene. Now, in terms of how they're going to intervene, they've changed a few things, right? The last time it was more on the focus on the dollar Japanese yen itself, but the wording that they're saying right now is that they're keeping an eye out on the yen weakness, more on the pace of how it weakens. So what it's saying, I'm assuming, is that they might take into consideration the pressure coming up from the euro and the sterling on the yen itself. So we saw the euro yen and sterling yen gain significantly, right? The dollar yen was just pretty much stable. We did put out a note saying that if it breaks 141, it'll track towards 143 and 145. And that seems to be the case at this point in time. However, in terms of the intervention coming out from the Bank of Japan or the Ministry of Finance in Japan, previously we were looking at 145 as a level where they're going to start, sounding the alarms, right? But they sounded the alarm early this time around. So we might actually see a little bit of an intervention coming in at 145. Or what they're saying right now, it's really trying to create a little bit of a psychological barrier amongst traders. So people that are long dollar Japanese yen, they're probably going to exit at 145. And a lot of traders are probably going to start selling at 145, right? So best case scenario for the dollar Japanese yen, I've got two at this point in time. One is that I think we're still tracking towards 145. The best case scenario for the dollar Japanese yen this week is actually to see that pullback happen. Now, the pullback is not towards 143. The ideal pullback is actually 142. So if we see price pullback towards 142, right, the range between 141 and 142, I think we're going to see a lot of traders coming in at 141, 142 to prop the dollar Japanese yen and lift it up towards 145. That would be the best case scenario. The other scenario is that we don't see that pullback and we see price rise towards 145. If that happens, then be a little bit more careful around 145. Take a look at where the resistance 1 and resistance 2 is located. It's located just below and above the 145 level. All right, the max that it could go if it does breach 145 is actually 145.50. Around those level, I think we might actually see a little bit of a selling happen on the dollar Japanese yen. So just be a little bit more cautious when it comes to trading the dollar Japanese yen. All right, so that's pretty much it for this week. Just keep a lookout for that panel discussion, the ECB panel discussion. That includes the Bank of England, the Bank of Japan, as well as the FOMC on Wednesday. I think that would be the key event for this week. With that, good luck with the trades, and I'll see you soon.